Welcome to the January 30th, 2023 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. If you enjoy the broadcast, be sure to hit the like button and subscribe. We'll be back every week with the best in financial news and the team that cares, McGowan Group Asset Management, a team of 10. I'm President, McGowan Group Wealth Management, and this team is so devoted to our clients and helping make great decisions, especially in the year ahead. We actually produce this each and every week from Bloomberg and other sources. So, hope you enjoy it, and I've got big news. This week's big news. GDP economic growth for the fourth quarter came in at 2.9%. We had mentioned this a couple of weeks ago because the Atlanta Fed said it would be about 3%, but the estimates were down at 1% or below for most of the fourth quarter. Wow. So the estimates were down here. Real GDP, Atlanta Fed was essentially correct. It was good economic growth. And the headline said, oh, it's slowing economic growth because it was 3.2 here. Well, that's a heck of a lot better than the recessionary first half of the year. Wow. So 2.9%. I would make the point here that the estimates for forward GDP, which are anemic numbers for 4 quarters, basically being a 0.4, those may also be too pessimistic based upon the 2 positive surprises this quarter. Surprise number 1, 2.9% annualized economic growth in the fourth quarter. But what else goes with it? Surprise number 2, in July, high inflation essentially disappeared. Let's just take these 3 months right here. December deflation, a little bit in November, and October was pretty robust inflation at 0.4. Add those together, your annualized inflation rate in the fourth quarter was 1.25%. The Fed's target for inflation is 2%, and the peak was 9%. Inflation essentially disappeared 6 months ago, and you can see it right here. That's actually great news for the economy. It's called Goldilocks. Not too hot, not too cold, slow, steady growth. We had that in the past. And when it does happen, companies are able to improve earnings through innovation and through structure. All right, now, S&P 500 earnings. How much money do the collective S&P companies make? And here, we're looking at some bad news. Earnings were down 1%. Okay, well, it's not good, but it's not horribly bad. Sales growth, 5.87%. Well, what that tells you is that you did have a contraction in profits, and I'm about to show you that. But here are the sectors. You've got to pick your spots in 2023. We believe global high yield, as that's very attractive discounts. We've covered the energy in prior shows. The energy companies, oil and gas, they delivered 10% of the S&P profits, but their value is only 5% of the index. That value is way too low, and that bodes well for energy companies. Halliburton raised their dividend 33% just now and announced a big share buyback. Chevron's buying back shares, and that sector's on fire. Earnings growth 81%. Materials minus 44%, that's bad. Information technology. The tech companies are 24% of the S&P 500, and their profits were actually down by 13% in this period. Notice the different sectors may provide the opportunity to be in the right spots. And that includes healthcare and certain types of financials that pay big dividends. Those are the sectors that we like in the portfolios right now. S&P 500 earnings. How much, take the S&P 500 basket, okay? How much profit do they make each quarter after tax? Well, you can see that number in the pandemic went to $25, very quickly recovered to $50 a quarter, and then on up to $55, Now it's about 50 bucks. So you did have profit contraction. Some of that is the cost of labor going up. Some of that was the rampant inflation that we saw, which has essentially disappeared. The estimates are that those profits will start to rise in a slow, steady way as we go through 2023. And that GDP estimates combined or consistent with that, GDP rises from near zero mid-year. Those are the projections, and there may be some great bargains that actually have valuation increases as the Federal Reserve stops tightening rates March, maybe February 1st next week when they have a meeting. This is the Dow over the 1-year period, and that was an ugly, miserable year. The low so far was the end of September, and it repeated during October. So that was below 29,000 on the Dow. This week finishing at about 34,000. So you could see the trend. Year to date, the Dow's up 1.7%. Oil hit minus 40 during the pandemic. And let's look at this. 130 high last year. That corresponds to inflation. Now, oil has risen back to about 82 after a setback here at the beginning of the year. Slow, steady profits from the energy sector are likely at current pricing. I'm Spencer McGowan, President, McGowan Group. Be sure to go to networthradio.com if you're ready to set up a brainstorming session to update your plan. Thank you for tuning in to McGowan Group YouTube. Thank you for tuning in to Net Worth Media today. And our efforts over the past 2 decades to educate clients and help clients make great decisions, that's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.